Friends, in this video for iThought Advisor, I am going to talk about bull market conversations. In every bull market, I have seen how social conversations evolved. This precedes my role as an advisor. From the time I came into markets, one thing I have seen is that when the markets are in a bull phase, everybody believes the froth is real. Nothing wrong with that. You see a beer mug, it's full of beer, but you see that it's still got 30% froth, right? A bull market is like that beer mug, right? But if you are a wine enthusiast, would you compare your glass of wine which you place next to that beer mug with that beer mug? You won't, right? But most investors do just that in the markets. What do? They curate portfolios which are to their risk appetite, which suit them, which are meant to deliver on their objectives. But they almost always want to compare their wine glass, which is filled with wine, with that frothy beer mug right next to them. What is this frothy beer mug? This frothy beer mug is the hottest part of the market in every bull cycle, right? In 2000, it was tech stocks. So if somebody had a portfolio of great FMCG companies in 2000, they were busy comparing that with this beer mug of tech stocks, which had some known names and a lot of unknown names. Okay, so that's those known names were the Infosys and Wipros of the world, which formed the beer, and the unknown names were the froth, right? Now let's come to the current market. In this market, which is the wine glass and which is the beer mug, right? That question must come to your mind. Yes, in every bull market, this parallel applies, right? In the current bull market, I would think that platforms, chemicals, APIs are all wonderful spaces if you look at from the long term, just like FMCG was in 2000. But within that space, you have some real beer and a lot of froth. So where is the market gravitating towards? I think the market is gravitating more towards froth and less towards beer, right? So given that, a lot of people are worried that they don't own the froth, that the froth is not showing in their glass, right? But their glass has wine. Many of them have value stocks. Many of them have very decent companies, compounders, good companies which are at reasonable valuations. But you know, in the market, you want to be a part of the action, right? You want to be owning the froth. So this tendency has not changed, whether it was during Harshad Mehta's time or 2000 or 2008 or 18 or now. The investor wants to see the froth in his mug or in his glass. But this is something that we must avoid, because you all know what happens to froth over time, and that's exactly what will happen to stocks which perform exceptionally in short bursts of time. So history has taught us that, and history will repeat and rhyme again and again and again, because that's the nature of the market. But when you see your neighbor's glass overflowing with this froth, you are feeling so bad. You're wondering, why didn't I have that beer glass? Why do I have this wine which is aged so gracefully? Why can't I have all the fun, right? This is something that comes to everyone, and I'm not surprised that you're going to get it. But remember one thing, the froth will run down, and at that time, you would be happy sipping your wine. So if you want to be in a good place for a long time, enjoying life in a nice way, avoid the froth in your investment mugs. Ensure that your investment mug has real stuff and not froth. Enjoy your day. Thank you very much.